What is up, everybody? This is Stock Market Education, and today we're going to be talking about Zillow and whether or not it's a buy. Let's get into it. Zillow is an online company that engages in home-related transactions. They are currently in 21 markets around the world with 200 million monthly visits to their apps and websites to see what's for sale. There are some amazing things happening with Zillow, and there are not so amazing things happening with Zillow. However, no one can deny that Zillow is a high-growth company with the opportunity to penetrate a $27 trillion industry, which is why we're going to take a closer look at Zillow today. Before we do, make sure to smash the like button and subscribe to the channel if you haven't already done so. With that being said, let's take a look at their numbers. Their market cap is $7.8 billion and shows that this company is still in the early stages of growth. In late 2019, the CEO said in an interview that Zillow has had 2,500 home transactions overall. 2,500 homes is not a lot of units to sell, so they have a lot of growth to put in before they are a serious competitor in the real estate industry. Actually, there's a realtor named Ben Caballero who set the world record of 5,801 properties sold within a calendar year, so Zillow is not really making too many transactions right now. However, they're growing at an extremely fast rate. If we look at their revenues, we can see that it says like and subscribe for the YouTube algorithm. We can also see that their revenues increased from $846 million all the way up to $2.7 billion for a percentage increase of 224%, which is amazing. That kind of growth is amazing to see in revenues. However, they're still losing money at the bottom line. If we look at their net income, we can see that they went from losing $220 million in 2016 to losing $305 million in 2019. This is mostly due to the high selling costs of the transactions as well as the high costs of advertising. In addition, their CEO expressed how they're in the early stages of the business and should be able to flip a profit by decreasing advertising expenses when they've penetrated a larger portion of the market. One of the great things about Zillow's fundamentals is their balance sheet. You can see that they went from having $506 million in cash to $2.4 billion in cash for a percentage increase of 374%. And it gets better. We can see that they have $6.1 billion worth of assets and only $2.6 billion worth of liabilities, which shows that Zillow is liquid. Currently, Zillow is losing $32 per house, which is pretty much breaking even on the houses. But their target for the future is to do $6,700 to $10,000 worth of EBITDA per unit sold. So that $6,700 to $10,000 is not revenue, it's EBITDA. So it's the money that's falling through the costs down to the bottom line. Looking at insider trading, we can see that 2.3 million shares were bought compared to 1.5 million shares sold for a difference of 833,000 shares, which is nice to see for a company. And if we look at the stock price, we can see that there's a resistance line around the $51 price mark, and the stochastics indicator went from being very oversold a week ago to almost being overbought, which is a pretty severe pop for the stock. Given current market conditions and the industry that Zillow is in, the price indicates that this stock is most likely going to stay in this consolidated area for a while. The two biggest problems for buying and selling houses is one, the price uncertainty. House prices can fluctuate hundreds or thousands of dollars every day, so getting a fair price can sometimes be tricky. And two is the time uncertainty. How long is my house going to sit on the market before I make the sale? Zillow's vision of making the housing transaction easier by getting rid of these uncertainties is very attractive to me. The growth strategy is clear and it's working. However, I can't seem to find a clear path to profitability at this point in time, which is why this company is only on my watch list. Because if Zillow can restructure their costs in such a way that they can make moderate profit margins, then this company might be the next Amazon in the future of real estate. Thank you guys for watching the video. If you liked the video, click the like button and subscribe, and have a great day. Bye.